Course was up yesterday. Has the positivity continued on to today?
Well, today's activity was much more flat, much more lackluster, really, as most equities, especially in the non-financials, pretty much traded flat through most of trading. There was really only significant interest in a few banks. Fidelity Bank, for instance, Acess Bank as well. Saw quite a bit of activity from the start of trading. That's probably attributable to the fact that their valuations are quite attractive. Their price-to-book ratios, for instance, are below 0.7 times. So it's not surprising that investors will focus there. But most of the bigger banks witnessed negative performances, really, with First Bank and GT Bank, for instance, closing lower.
Well, the general trend on the market is that by midweek, we're seeing a scenario where profit takers come back into the market. Are you seeing signs of that?
Yes, it has been quite volatile in the recent weeks. What it looks like is that in the run-up to the end of the year, we'll see the flatness and the volatility pretty much persist, although there is a chance that, we could close moderately higher from current levels. There are a number of positives, of course, that are in favor of the market. For instance, encouraging progress really in the Niger Delta, for one, and the fact that, the worst appears to be over as regards the issues with the banking sector. But a number of negatives still persist, like the credit squeeze, which has really stifled a lot of business in the economy at the moment. And really also the fact that, a lot of the banks are not lending, and that portends lower earnings for them now. And it is likely that that will persist into next year, which could also constrain earnings growth.
UAC came out with its third quarter results, and the company's pre-tax profit has fallen to about 6%. Is it just the tough economic condition that's affected the stock?
Yes, of course. The economy has been, the state of the economy hasn't been, as positive for the business, especially as it's consolidating its real estate business, UPDC, into its results. The real estate sector has suffered quite considerably, especially at the high end, simply because, it has been funded largely by credit in the last couple of quarters, and and it's being starved of credit at the moment. So we think its underlying food business remains robust, especially its quick service restaurants, especially as the pricing package it offers is pretty much at a premium, relative to other players in the QSR market that are more heavily priced, and so it's able to attract a lot of customers migrating to lower priced offerings like Mr. Biggs.
Now, like you've mentioned, the company is definitely diversified from real estate to food products. Would you agree that diversification program actually hasn't worked for this company?
Yes, it's worked quite considerably, especially as the company restructured its businesses a couple of years back and was able to get rid of most of the loss-making businesses, focusing primarily on its food business, which represents about 80% of its turnover at the moment. I think its offering has been really good there, focusing also its associated businesses like the real estate business, which helps in rolling out a lot of the new locations for its food business, as well as its water business as well, which serves to complement its food business. So the restructuring has been great, and diversification has played well in its favor.
Let's take a look at the value for this stock. Would you recommend a buy or a sell for this one? Or a hold, I beg your pardon?
Well, at current levels, our target price for UAC is about 46 Naira, which leaves not quite considerable upside from where we are. So it's a sort of a moderate buy, although we are more neutral on the stock at the moment. Given its appreciation, it's really come from slightly over 20 much earlier in the year. So it has appreciated quite a bit, and there is the likelihood that further upside might be limited, at least in the run-up to the end of the year.